Every now and again, I am forced to do the one thing that many of us, quite frankly, just don't do enough of, which is actually taking some time to sit down and think about what I'm investing into, if my current investment strategy is actually meeting my expectations, and then most importantly, is just asking myself if there is something that I could be doing or investing into that can better position me for a more successful financial future. Now, in doing so over the past couple of days, I'm reporting back to you all with my next dividend investing move. Now, I do want to pre-warn all of you, it may take you by surprise. With that, are you ready? So whether you are brand new to the channel or you've been tuning in all the way back since my Blue Lion Finance days, you'll know that I'm a dividend investor at heart. And moreover, that I have consistently harped on a few vital investing concepts like macros mattering, sticking to Buffett-like criteria of investing into high-quality companies and not just ticker symbols. And then there's my notorious line of not trying to get rich by Tuesday, all of which I'm going to continue to stand by. But after interviewing now dozens upon dozens of millionaires on my series Masters of the Market, I am throwing in a brand new concept for all of us to truly consider right now, especially for those of us out there with decades left of time to go until that ripe old age of retirement, which is now to ditch the traditional dividend monogamy strategy and instead seek to marry your dividend stocks to growth opportunities. Now, I'm not talking about just throwing in the towel and gunning for all the penny stocks out there or meme stock pump and dumps or the cryptocurrencies, all of which I can tell you now that will probably never be me. But I am talking about a very safe approach to investing into growth in order to help us all expedite our advance to the financial freedom finish line. However, before I get to the big investment idea, I just want to allow you to understand where exactly all this rationale is now coming from, almost out of left field, because it all hit me very hard after a recent comment on a Masters of the Market chat, which you can tune into, by the way, somewhere above me. But that comment read, can you get some pure dividend investors on your program? Meaning investors who are only invested into dividend stocks. Now, first and foremost, I want to let you know that I always do my best to look for pure dividend investors. But I try even harder to get investors who have quote unquote made it and actually achieved millionaire status, which is what I think at the end of the day we are all really after. And therefore, I went ahead to reply, thank you for tuning in. I have some in the pipeline, meaning all those pure dividend investors. I really do. But after authoring Dividend Millionaire, which by the way, Fabio's book Dividend Millionaire has a link there in the pinned comment, go check it out. I thought Fabio would be a great guest. But I think one major takeaway from all the millionaires I've interviewed is that it's not all about dividends. And wealth, therefore, isn't solely built off of dividends, but they are nonetheless playing a vital role to building wealth, which is all to say that dividend investing works, but you can fast track your dividend financial freedom by targeting dividend growth stocks, which means smaller dividend yields, of course, but likely larger payouts over time. Then you can supercharge your strategy, at least in my opinion, by putting some capital right smack down into growth. But if you're like me, an investor who wants skin in the game, but not a fan of losing sleep at night or worrying about my investments at all, you'll want to focus on a basket of stocks as opposed to trying to pick the winners, which, as I always say, is just about next to near impossible. So what exactly then does a dividend investor do? Well, my plan of action, the plan that I am going to be insanely aggressive about, investors, I am here to talk about the Vanguard Information Technology ETF, ticker symbol VGT, which right there in the name is the keyword technology, meaning this fund is all about tech. And the reason to be excited, or in my opinion, insanely hyped up about this fund is because the future is all gonna be tech. Just think about where we are right now today, how far we've actually come since the early 2000s when we went from, say, the CD player to swapping that out for an iPod, or cameras going from film rolls to digital, right up into today when we had Siri just about a year or two ago to ChatGPT. And across all industries, every business is just upping their technology game to keep up with an ever-advancing technology world. Whether it's AI integrations at, of course, Google, to the insurers over at Lemonade. Now, in my opinion, the future is here now, and we only really just embarked on this journey if you're really thinking about it. So ask yourself a couple of questions. Where are we going to be in 1 year, 3 years, 5 years, or a decade from now? If you think more advanced, sure, dividend stocks like Coca-Cola and Pepsi or J&J and Amgen, they're all going to be most likely around. But even they will begin to utilize tech on a very different front, meaning the time is now to simply bet big on tech companies. And with VGT, just pulling up the fund summary here, you can see that VGT seeks to track the performance of the benchmark index that measures the investment return of tech stocks while passively being managed. Now that right there means lower fees at the end of the day, so that's going to be great for all of us. But scrolling down to beneath the VGT hood, we can see that VGT is primarily composed of semiconductor companies, making up 27.6% of the fund's weight, before tapping into software systems at 22.9% and hardware coming in at 17.3%, whereas application companies make up about 14.4% of the fund's weighting, before scattering into now a handful of other subsectors within the tech space. Now, this all results in some home run investments like Microsoft and Apple that are the fund's largest holdings, followed by Nvidia for the biggest chip player out there, as well as Broadcom, Salesforce, another chip player with advanced micro devices, then Adobe, Cisco, Accenture, and Oracle, all making up the top 10 holdings within this fund. But now, if you're anything like me, and you probably are if you're a dividend investor, you're most interested in the fund's performance and reliability, to which I am positive this will blow your mind. But before I cover that VGT performance, I want to go ahead and actually take a moment to just invite you to join me on this financial freedom journey by subscribing to the channel. You're going to get all the urgent market insights and stock ideas on a weekly basis that you're going to need to level up as an investor. Now, while you're at it, go ahead and tap on that thumbs up button just to let me know that videos like these are actually delivering value to you. So I'll just go ahead and keep producing more videos and content like this. But all of that aside, let's get back to these returns, because despite this year's volatility, over the past year, the fund already returned 29.7%. But if we toggle here to 5 years out, well, a $10,000 investment would have already more than doubled to $24,249.48. And then on a decade's timeline, we're talking about a whopping 19+% return on a $10,000 investment, meaning it's an extra $50,834.08. And yes, you would have been collecting dividends all along the way with a much smaller yield, which is currently coming in at just 0.58%. But at the end of the day, this should just lead you to note that it's not all about dividends, it's about the total return to drive your profits. Now, on the other hand, nothing in life is free, as you probably know, but luckily with Vanguard, known for their extremely low fees, they're going to save you some money here at just an expense ratio of 0.1%, meaning $10 per $10,000 invested on an annual basis. So we're really talking about chunk change here. And that, at the end of the day, is how you attack the financial freedom journey. So what was my big takeaway? If you really want to drive more profits and you really want to set yourself up for your future, tech is going to become really a focal point for all of us, or at least it should be. Now, I want to sleep at night and have some peace of mind. So VGT is the perfect fund for me. It's the fund that I'm going to be attacking all year long and looking to really drive up my share count with VGT to just above 100 shares right now. But that's just to start. Now, at the end of the day, I want to know what exactly you're doing to ramp up returns, whether you're a pure dividend investor or you've actually successfully married growth in dividends, or what the heck you're doing. Comment down below to let me know. Of course, you can find all the latest insights right here, or just subscribe to keep up with each and every video.